How the market beats traders all the time. Hi, it's Charlie giving you Wednesday's video, and I hope you're very well. Well, there's many ways that the market does it, and to a large extent, the market doesn't need to do too much because people will do it to themselves. Let me give you an example. If you go to a casino and you're playing blackjack or any card game or roulette, whatever it is you're playing, the casino knows that it has an edge. It's a very, very small edge, as many of you are aware, but that's all the edge that it needs. It knows that anyone could come into through its doors on any one particular evening and take a load of money from the casino. But if the casino's there every day and opens its doors every day, there'll be enough people that will make mistakes and will over leverage, will bet too much on a single hand, and then it doesn't come their way. And there will be people who will get overexcited and overconfident and do similar types of thing. There will be people who will have some losses, lose some hands, and then think, right, okay, I'm going to get some more chips out, and then we'll bet everything on black. It's all of those sorts of things are exactly the same as what goes on in the market. So the market doesn't actually need to do too much because it's the individuals who will do it to themselves. Essentially, all the market needs to do is move. And as it moves up and down and sideways and forward and back, that will prey on traders' emotions. And it's that preying on traders' emotions which is what creates half of these problems in the first place. When a market is pushing up, then traders so often think it can't surely go any higher. The market's just moving, doing its thing, but there'll always be a number of traders who think it can't possibly go higher. And there'll be traders who might be selling right away down here, or they're selling all the way up, which is typical of certainly of retail traders, and because that's how human beings think. It can't surely go any higher, and then the market will go higher, just high enough to get that trader or that series of traders to throw in the towel, only to then see it pull back and go down. So, and likewise, it's exactly the same on the downside as well. The market itself will constantly be doing things which it's just moving around, but it might be that you've just had a few stop outs in a row, and that creates revenge trading, which, like that gambler, becomes a problem. Or you've had a few stop outs in a row and actually you become really fearful, and then you stop trading or hesitate too much, and then you miss out on opportunities. So the market, as I keep saying, the market is just going to move around doing its thing. It doesn't need to be particularly going for you, like a lot of people have conspiracy theories on the market. The market doesn't actually need to do too much, apart from move around, and the average retail trader, that will be enough for the average retail trader to get emotional. And once a retail trader is getting emotional, they're going to be making mistakes, like I've just said, hesitating or revenge trading, getting too greedy, all of these things that go on. So the simple answer to how can you actually stop that is to get on top of your own emotions. So how do you go about doing that? Well, one thing is to have a plan. Yes, have a plan, have a strategy, and that's why so many traders are looking and working on strategies, because if you've got a strategy with a set number of rules, then you're less likely to become emotional. However, that alone won't stop it, because even when you've got a strategy, what happens when the strategy has a number of losers? Are you likely to then go off piste? And this is the thing, and it's been proven. I came from the fund management industry, and even within fund management many years ago, what they found was that fund managers had this thing called style drift. So there might be a large cap value manager, and then they start buying gradually over time. They have this style drift, and then they start going off their mandate and buying small cap growth stocks. It's a slightly exaggerated example there, but that's a genuine thing that used to go on in fund management. And so then what they had to do is impose managers of managers to make sure the managers didn't go off of their remit. So Although we might have a strategy, it's no guarantee that we're going to stick with it, because we might all of a sudden have an emotional day and we find ourselves, oh my god, why did I take that trade, or why did I take that trade there? I didn't stick to my plan. I went off because I read this article, and my chief market analyst at my broker was banging on about buying gold, and I bought gold and it went down. Whatever it might be, there's always going to be those reasons why people might go away from their plans. So yes, it's important to have a plan, but don't think that just because you've got a strategy and a plan, that's a guarantee that you're going to stick to it. Automation, that's another one nowadays. People will say a lot, well, just automate it, and then you can't get emotional. Well, you can, because even when you've got automation running, and so you've automated a strategy, what happens when the automated strategy starts to underperform? Are you likely to turn it off? So you might turn it off and chuck that in the bin and then become a strategy hopper, even with automation. And actually, there might have been nothing wrong with the strategy that was running, and you've just chucked it in the bin because it had a losing phase, for example. So automation isn't necessarily the total answer. None of these things by themselves are the total answer. One thing that you definitely would need to do is work on your mindset. So constant self-talk and self-diagnosis to help stop you getting in your own way. Whether you're trading manually or you're trading with automation, you can still get in your own way. So you must do a lot of mindset work. Doesn't matter what style and what tools you use for your trading, that's so important. So yes, the way to overcome the market, and the market is constantly throwing temptation at you, just like a casino, but we need to resist the temptation. We can resist the temptation by having strategies and a plan and approach to the market. However, don't underestimate the power of the dark side. The market keeping on throwing that temptation at you can lead you astray, just like those fund managers. So work constantly on your mindset. Even then, you're not guaranteed of success, but it certainly puts you in a much better position. Hopefully there's some food for thought there. This week I shall be back in touch over the weekend. Take care for now.